With the big oil conference in Algeria coming up this weekend, where Russia and OPEC producers are expected to have informal talks towards some sort of production arrangement, crude oil continues to be a very active commodity this week. We also have over the next 24 hours or so two sets of inventory reports from the United States, plus we may continue to see news coming out of Nigeria and Libya surrounding the potential increase in exports from those countries. Oil it remains very active, but as we see during the summer here, after its initial big recovery rally up from $24 back in February, it's basically been leveling off here in about the $40 to $49 range, 40 to 50 range really, give or take. More recently, this trading range has narrowed from the 42.50 to 47.50 area. If we look at the RSI, we're also seeing it dominated by a trend between 40 and 60, again indicative of a sideways trend. That being said, within this sideways trend, we are seeing some very significant swings. It's not a flat market. 1 to 2% moves in the day, even up to 3%, have been fairly regular and consistent throughout this move. So we do see that traders are active in there moving crude oil, and it's moving off various news, even though the overall trend is sideways. So there's some good swings within range-bound trading. It makes for an excellent market to create trading opportunities. Today's move, we can see here there was a pop-up from about 42.60 to about 43.80. That was on word that Russia could be agreeable to a one-year production cap deal if OPEC toes the line and comes on board as well. Unlike back in April when the discussions in Qatar fell apart, this time around Iran is a lot closer to where it was pre-sanctions. So it's now could be potentially more agreeable to some kind of a freeze. Back in the spring, it was still ramping up its production and expecting everyone else to make way for it. A number of countries have been running at a record productions, particularly Saudi Arabia. So we're not looking at a huge cut to production at this point in time. But at this time, even a freeze could help to continue to shore up the market. Looking at this here, I mean, there was talk, by the way, today from Venezuela that they'd like to see a 10% cut and the oil price up around 70. That seems to me to be a little unrealistic. I think this 40 to 50 range could become a sweet spot for the oil price. Why? Below 40, nobody's making any money. And above 50, you run the risk of non-OPEC U.S. production coming back on stream. So I do think you'll find yourself range-bound in this 40 to 50 area for a while. As the week progresses, we could see a number of things move oil markets, continued speculation about what might happen at the Algeria conference this weekend. If we don't get a deal, we could see oil go back down to 40, maybe even dip a little bit below 40, but below 40, I don't think it would stay there very long. If we did get a deal, we could see it pop up back above 45, maybe take a run at 47.50 or even 50 if we did actually get a production deal. I don't think here at 43.50 that the street is really pricing in significant expectations of a deal. Yes, it's out there, and yes, there's lots of rumours, but I think you'd really need to be 45, 47 to have people actually taking a deal seriously at this point in time. So on top of that, we have other fundamental developments. We had Libya and Nigeria are expected to be ramping their exports back up over the next few weeks. Libya's held off, which is what's helped to provide some support for the oil price because of renewed violence in the country. If that subsides, we could see oil price drag a little bit on that. Plus, we have U.S. inventories. We had 2 weeks ago big, massive drawdowns in U.S. inventories, and we had small rebounds last week. In fact, the DOE still had a small drawdown. So we'll see what happens with the API and the DOE numbers again, and also keep an eye on the gasoline, the distillates, and things like that, natural gas as well, because we could see some movement off of those as we did last week with the higher than expected distillates. It's sometimes where does the inventory find itself? Is it in refined products? Is it in crude oil? So that can also spark some significant swings in the oil price. But with the key is that with so many things going on, we could continue to see significant trading action in crude oil in the coming days.